Hi everybody, it's Adam. I am back here with another video. As you can tell, the market has been on a tear lately. So I'm going to go over FOMC yesterday and also what happened today in the market and also what I predict to go forward. If you want to skip ahead in the video, by any means, go ahead and do that if you want. But anyways, where are we in the market? What can we possibly expect going forward? So on the monthly time frame, we came down in these lower levels, back down into this fair value gap, and then we started to shift away, creating a very, very classic buy pattern up within here, following order flow back up above these relative equal highs, and now we are sitting here. So now we hit higher time frame liquidity. What's next? There's relative equal highs up here, back for all-time highs again, up here on NASDAQ. So I'm going to watch here to see if we accumulate and go sideways. So after huge liquidity is taken, we can possibly accept some consolidation. So I want to watch here in the daily time frame. Do we consolidate kind of like what we did over in here when we took these highs? Is consolidate for a few weeks, maybe even up in here where it consolidates for a few weeks. So do we get that now because we came up above all these relative equal highs? So if we go over here to ES as well, we are completely tearing on up through. So if we do get here on NASDAQ up above this high, we could possibly expect ES to be possibly above this high here, creating the bearish SMT divergence, and then we just want to see what happens with price action. But for now, things look bullish, and I'm not bearish until things actually start flipping around and using inversion fair value gaps to go lower. But anyways, let's get into the market. What happened yesterday? So we'll go over yesterday first. I don't have too much notes up from yesterday because I did the live stream in my group chat. So if you were in that, good for you. But we basically watched this live. There wasn't really much price action after FOMC. So here it was yesterday, right here. Let's pull this up. Let's go over the price action on FOMC. So it traded down with the news as expected, coming down below all these relative equal lows here. So we are expecting all of these lows to be taken and possibly even traded down below into this 1 hour gap that we do have down in this time frame. So I was actually expecting this little bit lower if price wanted to reach down there. We did not get that. So we ended up trading down, created bullish SMT on the wicks with Dow. So then we started trading up higher. So now we're looking at this level. What's happening? We have this fair value gap here in the 15-minute. Draw that out. So we come up in there, and then we just start dissecting what's happening here in price action. I do like the retracement back down into this range, and that's where I took the short personally. After the 5-minute closure below this wick right here. So 1 minute closure below the 5-minute wick. So I'm actually going to measure this out so you guys can see it right now because I did it on the live stream. But this is what I was looking at right here. Once we get that 5-minute closure here, we're looking at the 1 minute wicks as well. So this basically, this 1 minute closure told me price was coming down towards these lower levels. And we're just looking for a quick 5 handles, which was a little bit more than that anyway. So I'm looking for 5 handles, but then it reacted off of this and continued back up higher towards these highs that were up within here. But what made me want to take the short, okay? Always, same thing every single time. It's liquidity taken, higher time frame PD array hit, and then get in sync with order flow, okay? So what happened here? Liquidity hit right here. Higher time frame PD array. Yes, it was hit. It was a fair value gap with a 15-minute. Now order flow is telling me it's shifting lower, break a market structure below this, trades back up on in, uses this inversion gap here, rejects the inversion gap, breaks the structure below this low. So now we're creating this long-term high here, another high here. So now this high should not be violated. So now we have a bearish order block sitting right there along with this inversion that's sitting here. If you go to the 2-minute time frame, you can still see that inversion level right there. If you can draw that out in the 2-minute time frame, then we shift down below it again, rejecting it. We have SMT at these wicks. So we're actually making a lower high here. On NASDAQ, we're making a higher high. And then it starts to trade down, close down below, telling me it wants to work towards this low down within this area. So ICT episode 12, I believe, of the 2022 mentorship goes over the long-term high, the immediate-term high, and then the short-term high here and the short-term high here. This immediate-term high is the one that fills in an imbalance, which it did on the higher time frame. It'd be like a 2-minute or a 5-minute. So every candle that fills in an imbalance, that immediate term high should not be broken. So now we have a short-term high to the left, short-term high to the right. We shift down lower. So now this short-term high should stay intact. So looking at this to hold price down there. And once we shift back up above this high here and we're not continuing down towards these lower levels, then we are likely to go back up higher. So that was basically my thought pattern on something like this here. And then in the morning, there was a nice setup earlier in the morning. It was just a buy that happened up within here. It came back up above this inversion right here, this closure, this retest, this order block. Boom, SMT took it up towards this high here. Boom, very nice trade. From here to here. Very nice. Just a few minutes in that trade. But anyways, going over today's market. Let's go over today's market. Let's go over this. This is actually very beautiful today. All right. Oops. Let's see if I get my chart to freaking work. All right. Anyways, we consolidate in London. We start trading back down in London pre-New York. We come down, hit the order block right here. Still looking at these relative equal lows, but since we are so bullish anyway, I'm going to look at this as an order block and possible rejection blocks here on the higher time frame. We're just trading down into this wick here. So if I measure 50% of this wick, we come down below 50% of the wick. So we treat these wicks as gaps, okay? So it came into the wick and it started trading away. Now I'm looking at these inversion levels. This 15-minute inversion, do we close bullish above it? Yes. Now I'm looking at lower time frame inversion levels at these lower time frames. Break a market structure, retest the order block, boom, hits the breaker, trades away. Very clean. 5-minute order block, boom, trades up. 5-minute order block, boom, trades up. 2-minute closure, this is what I really like. Stuff like this. So it's creating SMT with NASDAQ. I just know because I was watching it. We get this bullish 2-minute closure, trades back down and through, comes back up above, and once it closed back up above this range here, this was getting just ready just to completely launch off. So usually I don't trade till 9:45, but looking at this area here, I had to take something, you know. But basically, this 2-minute candle closure gave me the confidence that price wanted to keep working higher. So I've really been putting into my strategy 2-minute closures and 5-minute closures using the inversion levels themselves. So once we really get this, I don't expect price to really come back down below this range because we have a lot of PD arrays. Like it's respecting the bullish order flow. We're coming up above the 50% of that 1 hour wick and also the opening range, opening price. We're using that as a support to continue higher, up in the higher part of the range. And then same with up in this area here too. We come up on through, respecting these PD arrays, comes back down, and then we're using this area. So we close up above this inversion, trade back down, and then we close back up above it. Then it still just wants to continue a little bit more. Pulls back down below this low, creating more bullish SMT with NASDAQ. So let me pull this up real quick so you guys can see it. So notice how we're making a lower low right here on ES and a higher low on NASDAQ. And we start trading away. So that's telling me price wants to continue up higher in the higher part of the range. So you have this inversion level. Draw that out from here to here. Let's draw that out from here to here. Draw that out. We close up above it. And then we start trading away, attacking that buy side liquidity. So it reaches right up into here, looking just for 5 handles. Boom. After we get that closure above that inversion, after the SMT, after the order blocks, after the market structure shift, boom, gets ready to go. And then still, we just consolidate and work our way back up higher. But personally, I was in on NASDAQ within this area, comes up on through, and then I basically get hit out at break even after I take partials on this trade. But anyways, that I believe it was half percent I made today. But anyways, comes up. I was looking for a few percent on that trade, but take some partials, and then it came back down, break even. I'm done for the day. You know what I mean? Between this one and then the other buy, I'm just done for the day. I didn't need to do much anymore. I have my other business to work on. But I came back and I looked at price action, like what it did later on. We came back up and we created more bullish SMT. So look how we create these relative equal highs. Yes, it pokes through, but it trades back down. But here we're making lower low, lower low, lower low. And then at our key time after the lunch session, so 1 to basically 3:45 is what I look for. 1 o'clock to 3:45 typically. But this is when the setup formed. So it was clear textbook setup. Bullish SMT, shift to market structure, fair value gap. There's a 2-minute candle closure right within here. Trades down, uses this breaker wick right there, and then starts trading away. And then bullish order flow from there to there to there to there. Back and up through, trades back down and in, closes up above this 1-minute inversion. So even if you miss the trade, boom, there's another one, bullish closure, retest the high of this breaker here with that one wick, then completely just trades right away from that area. It does not need to come back to it. So if we're looking at this area here, looking at the expansion that we just got from this level. You know what I mean? So we just got this nice expansion out of here, retested it, 2-minute candle closure, even here, retested the high of the breaker, then just continued from there. And then for the silver bullet from 2 to 3, we come on up, we trade back down into the range, look at the SMT. Bullish SMT in the wicks, lower low, higher low, shift in the market structure. Now, what are we looking for? We're looking for inversions, we're looking at fair value gaps, we're looking at break of market structures. If you want to pause it here, do you see a break of market structure? Do you see an inversion level? Yep, break, retest. So broke market structure, same over here, broke market structure, retest. If that's not confident enough, I like to still wait for more confirmation. So now, where's the inversion level? The inversion level is right about here. So this is a bearish fair value gap. Once we break up above and close above it, and then where can price go? Oh, I'm looking to close up above it. We have another inversion level right here on the 1 minute. Boom, close up above that inversion level, retest this fair value gap. Should not, if we are going to respect this inversion, we should not come back down below this fair value gap. So if we're looking at this area, right within here, let's say even your fill was bad. Looking at something like this, targeting 20 handles on NASDAQ. That's really all you're looking for. If you're going 20-20, you can even map it to there, boom. But if we're gonna look for this range, we can even look for the external range. So I do like doing something like this, get a standard deviation of this stop hunt back into this area that filled in the fair value gap. So this last run that we had here, -1 standard deviation right there, -2, and then -3. Yeah, we never really got up into that area. But anyways, that's still a very nice price run, just up to the -1. Like honestly, that's still very, very good. And even then, if you want to do this entire range, let's go to the 5 minute. Let's go to the 5 minute time frame. Let's see what we get. Really depends where it falls in with higher time frame PD arrays, because I know ES was working its way up into the higher fair value gap on the weekly time frame. So once we hit the fair value gap there, I'd probably be done. So at the time it actually hit the fair value gap, I believe it's right here. That would have been up into the -1 standard deviation anyway on NASDAQ. So that would have been it for me if I did trade the PM session, but very clean setups. That was clean. The one down here was clean. Very, very beautiful. Just the bullish order flow today. Just people think you're missing trades, but this is not missing trades. You know, like this is really just finding your setup and then going with it and getting in order flow. That's really it. Getting in sync with order flow and knowing what to look for. And for me personally, the inversion gaps, the 2 minute closures have absolutely killed it. And then I'm using the breakers paired with the order blocks, paired with everything else, the opening ranges, everything ICT teaches. But very, very beautiful, very beautiful. I'm gonna wrap this up here. If you guys have any questions, reach out to me. So not a financial advisor, but I love doing this stuff. So take it easy. Love y'all. Peace out.